Alright, it's 10:58 on Tuesday, and I want to discuss trading patterns in this video because, however, it is great to have a strategy, a proprietary indicator that is successful. It's even greater to have the right stocks and the right patterns to trade your successful proprietary indicator. What I have here is simply some pivot lines, and we have the median moving average up, and of course the volume and the average volume at the bottom to see where there's play in the stock and what areas are getting the most activity. Now, about 2.5 years ago, I discovered floor trader pivots, and I used them for a while, and they worked, and they helped me gauge the market and see where the market's going, and it also helped me stay on the right side of the trade. When I'm using moving averages, they're not for support and resistance levels, of course, unless it's maybe a 200-day moving average on a daily or weekly time frame. Otherwise, they're basically to show me what is the trend. The 50 on the intraday time frame, that's the long-term trend. Is it up? Is it down? I want to know. I want to be comfortable with taking a long on a stock that's trending up. I don't want to be shorting these moves in Goldman, right? Even though you can make money doing that. But the probabilities say if a stock is trending up, you're going to make most of the money on the way up, on these moves right here, and accumulating on the way down. You know, it's hard to step in and buy a stock when you see it's moving down. But you have to see the future, and after you've been doing this for years, you'll eventually get used to it, and you'll get used to scaling into a position. Now, I know when you're trading with Ameritrade or E-Trade and Scottrade, brokers like that, most of them won't do a per share basis. Now, I know on the Thinkorswim side they're still doing it, which TD Ameritrade did acquire. But that's why a lot of people have to go to proprietary brokers called prop firms, and they'll give you more leverage to trade with, but they're stricter on what you can do with your money. Alright, I just pulled up a 15-minute chart of the Goldman, and what we have here, this is a monthly pivot level right here. So this was resistance. We had the gap down on Monday, almost every stock gap down. And the blue line right here is where we opened at the week. This has been an indicator that has been used probably for 30 years, maybe even more. But it actively, when I did my research, has been used for 30 years. So what you want to do is you want to see where the stock opened at on the week, and that's that first Monday. So we see that the prior week we finished down, obviously, and then this week we opened up. So now we start saying to ourselves, let's go ahead and attach a moving average indicator on there, and let's see if we could start breaking out of these resistance levels. Let's see if we could get over the open of the day and perhaps get over the prior day's close and start moving higher. Let's see if we got any analyst upgrades on this stock, and are they credible analysts? Were they some of the top performers calling the housing collapse, or go all the way back to the '87 crash and the dot-com bubble? You know, I want to work with notable analysts. What Goldman did to that Apple stock when it was above 600 and they downgraded it and now it's at 560, that's what we need to watch out for as retail traders, because we're not in a firm and we don't know exactly what they're doing. So a lot of times we'll find ourselves on the wrong side of the trade, and if that happens, you got to be comfortable with taking a small loss. You know, something that one of my mentors told me is he told me that for a period of time you should just focus on taking small losses, and eventually it will get into your brain. It will put an imprint in your brain that says it's okay to take a loss. because as long as your profits are greater than your losses, you could trade. I know I use this analogy a lot, 8 trades, and all you have to do is have 2 successful to make up for those 8 small losses. So we see the stock moving up over the open of the day. Here's another pivot level from the week, 112.32. And then we switch to the 1 minute. And what do we see here? We open up, we move down, start hovering around the open of the day, and then after that, they tag it one more time. Now the buyers step in. That shows us that the trend is strong. I'm not shorting this right here. There's no reason for you to short a strong stock. If you want to short a stock, short a weak stock. Look at Apollo Group. Look at Radio Shack. I think it hit a new 52-week low today. There are stocks out there that have bad news on them. If the market's moving up, there's a good chance that Goldman's moving up, and I'll discuss the market in a moment. But Goldman's kind of a bellwether. So we come back down to the weekly support level, and this is just like a pivot point, a floor trader pivot. I also have that code. It's the actual pivots that the floor traders use in the S&P pits. So anyways, we start moving up, we start bouncing off that. Now not every support level is going to be like this. A lot of them, they'll come down, they'll try to juke you out, and then they'll move back up. But you want to see a pullback and then a higher move than that candle that pulled back. I could do a whole nother series just on pivots. Anyways, our median's telling us, look, the trend's starting to pick back up. We're having small pullbacks here and greater up moves, right? So we position ourselves to the upside. Now we come up to 113.11, which is another monthly resistance area. And we start hovering around. They bring it below once. We're saying, okay, it looks like it's starting to get weak. It looks like we're starting to prove that we're going to have a down move, right? We draw this little support level right here because this is the candle that we have to break below to get short. Come back down. They still couldn't close it below this candle. Now we have the big up move. So 113.67 is the area. But are we going to short this? The only way you could short this stock and would have a good reason to is if the market started tanking. As of right now, we're still above 113.28, and it's just not my style. I'm trying to help you get in the best pattern so you could have a greater chance of your indicator working and being on the right side of the trade. And here we have a bounce. It did pull back to roughly 113.15, but now you see it moving higher. So the point of everything that I just said is let's find stocks that are trending up, because your probabilities are greater to buy on the dip rather than sell the rip at the top, because no one knows where the top's going to be. And now we're 2 cents from the highs again. And if you wanted to get really technical on it, you could say this. You could say the guys right here that came down and they started shorting around this 15 area thinking that we're going to make another leg down. Well, those are probably amateurs, and they're letting their positions ride all the way up. They probably try to short a little more here once we went below this candle, etc. Now they're feeling the pain. They don't know how high it's going to go, and they're saying to themselves, if I could get back to even or 5 cents from even and I could close out of this position, I'm going to do so. So when it comes back down, this is where they close out of their position. They get out for a small loss after sitting through hundreds of dollars or thousands of dollars in pain, and then now the short covering comes through and the smart money, because they know exactly what's going to happen. And now we push to a new high. The reason I was looking for longs is I was watching the SPY's action yesterday, and what we had was we were hovering below the open. We tried to test it a few times, and then finally we broke out going into the close and got above that level. Today we were looking for a continuation, and the target price was 137.84, which was the prior week's open. If we could get back up there, hover around a little bit, eventually get over the 138, you could potentially get higher moves. The reason I have to look at the SPY for this open strategy is because the futures, which I watch and trade on a daily basis, don't calculate the same opens. They calculate it in extended hours, and the strategy really doesn't work when you do it that way. When I was watching the Google for a long today, this was my #1 trade idea. I saw, yes, we had the trendline break, we depreciated vastly, and then we saw the 200-day moving average. We got a lift off of that going into the close, and today it was on my radar for a long. Here's the 15-minute chart again. Here's the open. They're fighting bulls and bears on Monday, right? Fighting, and finally get above the open, just like on the market. And now we have our continuation. Let me switch to 1 minute just so you can see what happened. All right, so right after we got off the open and lifted, look at these massive spikes on the 1 minute chart, and they could not close it below the opening line of the day. That's another tool that you should use, the opening line of the day, intraday. And then we get back above the 50 and it's game over, and I'll show you what the weekly options did. Could have been accumulating right around the 250 area. That's a $2,500 investment, and if you sold it for 2 points up, not even at the highs, just 2 points up, that would have been a $2,000 return on your investment. So these are the kind of trades I'm looking at. I hope you liked the video. If you're not subscribed, please do so, and good luck trading.